Trend trading is one of the most profitable trading strategy out there. Like, it's one of the most oldest strategies when it comes to trading the market. And the simple reason is that the market always creates a trending opportunity that always gives traders the opportunity to make profit from the direction the market is already moving to. That's why in this particular video, I'm going to share with you a step-by-step guide on how you can actually trade trending markets and make sure that you are trading it profitably, whether you're a beginner or not. With that already said, before we get started, kindly do something for me by joining my Telegram channel where I do drop Forex signals for 100% free, and also you can also tell me whatever video you want me to create right on my Telegram group. So with that already said, let's get straight into today's video. Let me share with you every single thing you need to actually trade trend profitably. So hello guys, now that we are on my computer, I'm just going to take you straight and share with you every single thing you need to know about this strategy. Now, the idea we are going to use in this strategy is simple. On a daily time frame, we identify the market direction, so do the 4-hour time frame, and then we'll draw our trend line on the daily time or the 1-hour time frame. Now, why do I do this? The reason for this is that once the daily time frame and the 4-hour time frame and 1-hour time frame gives us same response about the market, it simply means that what the power of the market to that direction is really strong, which means you should be looking for an opportunity to trade it from there. You should follow whatever thing that is print. So when I'm trading, I always take the best 3 time frame. Like if I want to trade a 5-minute time frame, then I'll be using the 1 hour, 15 minutes, and 10 minutes to do my drawings, and I'll use the 5 minutes for my entry. But in this scenario, 15 minutes is my entry time frame, so I'll be using daily and the 4-hour to identify market direction, 1 hour for the drawings, then I'll go back to 15 minutes to look for an entry opportunity. So now this rule is simple. The first thing is that we'll move over to the daily time frame. Remember, I said the daily time frame we are going to look for the market direction. And now looking at this market right now, no one needs to tell you before you say that this market is a downtrend. Now, why am I saying that? The reason I'm saying this is simply because over here you have what we call here was a major support level, and then this top here was a major resistance level, and the market has broken out of it and they came back to retest at this point. This one tells you that what the market is ready for the downside, and then more importantly, you can see that the market has taken out this other support here. So wherever this market does, it simply means that this market is still going to go lower, and considering the fact that considering the fundamental fact that we're around the market. So this particular trade I'm using for this tutorial here is a trade I took within the week on Euro Australian dollar. That's what I'm using for this tutorial, and within the video I'm also telling you the reasons why I took the trade, not just the kind of setup I use in trading. And if you've been watching my video, you see that all my setups are literally the same. Whether I'm trading a ranging market, a trending market, or regardless of what I'm trading, you see that my setups are often the same because I don't have a lot of changes to make within it. So now, the first thing you need to do is that on the daily and 4-hour time frame, you need to identify the market direction. And in this one, we've confirmed that what the market is a pure downtrend because it has broken from the ranging area, which is within this box here, to a downward movement. So from this, now the next thing is that I'll move over to the 4-hour time frame. Now my work on the 4-hour time frame is nothing complicated. It's just to confirm that what is still giving these downward vibes. And if you look at the 4-hour time frame, the 4-hour is still giving us these downward vibes, which means that what the market is still going to go lower. Now after identifying all of this, now we go over to the 1-hour time frame to go draw our trend line. Now in case you are someone who doesn't trade the higher time frame, who doesn't trade the 1-hour time frame, the 4-hour time frame, or the daily time frame, now what you can do in this scenario is that look for the time frame you trade and then look for the three nearest time frames for it. So when I'm looking for my entry opportunity on the 1 hour and then the 15 minutes, I use the daily 4-hour, 1 hour, and 15 minutes. Those are the 4 time frames I use in most of the cases. But when I want to scalp, there I can use the 5 minutes and 2 minutes and then 1 minute for the rest. But when I'm not scalping and I want to hold the trade for about 4 hours to 8 hours, I prefer using the 1 hour and 15 minutes as my lowest time frames to get a better overview of the market. So now with that already said, let's get straight. Now that we've identified that the market is a downtrend, now it's time for us to actually draw our trend line. And now here's where the market gets complicated. A lot of beginners find it difficult to actually draw accurate trend lines that actually shows what to expect from the market. And that's why I'm going to advise you to really pay more attention during this particular session. So to draw my trend lines, I'll use the 1 hour for that. Now, here's one thing you need to know when drawing your trend line. Now, some people, when they want to draw trend line in this kind of market, they are actually going to take their trend line from this highest point downwards. Now your mistake here is that the trend line you drew is not wrong, but considering the time frame you are drawing the trend line is wrong. When it comes to drawing trend lines, I always advise that use the two latest zones and wait for the market to come back into it. Now, why am I saying you should use the two latest zones? The reason why you should use the two latest zones is simple, so that you can wait for the third pull in before you get in. So for example, let me delete this off. Now let's take a look at this point here. If I'm drawing a trend line from here like this, if I'm drawing a trend line within this area here like this, meaning I've got my third touch here, and this trend line has ended because what it has market has broken above it. Or another thing you can do is that if you want to adjust it, then you can choose to what? Let me delete this. Then you can choose to move this above. But I don't actually advise this. When I'm drawing my trend line, I don't look at what the market has done in the past. I look at the two latest zones that the market has created. So looking at these two latest ones, here is where we have it. Just take it from here. Now when drawing your trend line, make sure you get as much touches as possible. But before you should consider a line a trend line, make sure that it has gotten a minimum of 3 touches on it. And this one we drew here only have 2 touches, meaning what? We are going to wait for the third touch to determine our entry. Now another thing you need to put in mind whilst drawing trend line is simple. Whilst drawing your trend line, make sure that your trend line doesn't cut through any candlestick body. The highest your trend line should do is that it should cut through the wicks of the candles. So now after getting this like this, now the next thing I'm going to do is that I'm going to wait for the market to pull back to this trend line again. But whilst waiting for that, I'll have to identify any other form of structure that the market has created. So when I'm trading trend line, I don't just wait for the market to come into the trend line. No, I do other stuff to see if the market is going to print out any other form of entry trigger for me. So in this scenario, I'm just going to wait a little bit for the market to make some moves. Now let's take a look at this area that the market has moved. One thing we'll notice here is that what? We have this fair value gap here, which is between this candle here. Let me mark it out for those of you who don't know. Between here and here, we have a fair value gap, which is this candle here, and this candle here gives us this fair value gap within here. So we have an hourly fair value gap, which means that it's a very strong fair value gap. So let me just get my drawing too. So we have a fair value gap here. So here is it. Now I have this fair value gap. Now the next thing I'm looking for is that I'm still looking for the market to either pull into this fair value gap at this point or pull back to the trend line. So now I'm still going to wait. So now when you draw this trend line, remember that you are not looking for any trading opportunity until the market tests this line for the third time. If it doesn't test for the third time, then avoid taking any trade. So in this kind of market, I'm still going to avoid taking any trade until it pulls back for the third time. The purpose of me drawing that fair value gap is to mark out, so in case this market mitigates this fair value gap and then goes a bit higher, then I might change my bias about the market. But since the market is still within this area, I'm just going to maintain the market movement. So now let's see what the market does. It pulls into the fair value gap, pulls downwards. Okay, still not giving us our third touch on the trend line yet. Now you see we've gotten the third touch. So now let me just cut back a little bit. So now that we've gotten our third touch, but you can see that the third touch actually came with a serious push of the market, meaning what? The market bounced off it immediately, and that's quite bad. So what do we do at this point? What we'll do at this point is that don't give up on it, because now you've gotten a good trend line that has gotten 3 touches. Until a trend line is too weak is when the trend line has gotten 5 or more touches. But in this scenario, our trend line only have 3 touches so far, so we can still expect this trend line to give us a trading opportunity. So now in this scenario, one thing I advise you to do is that don't mainly look at the trend again, but identify other zones like supply and demand that you have within it. And in this scenario, here's our area of supply that I'm going to mark out here. So in this scenario, we have an area of supply here, which is this candle before this huge fall off. The reason why I will not observe this fall off that much is simply because the fall off was due to a news, whether France election sagas and the rest in Eurozones. So now we are just going to wait for the market to give us a pullback to the trend line again, and then we'll look for a trading opportunity. So now let's see if we get a pullback into it. Okay, we've gotten it. We've gotten a pullback into it, and you can see we've gotten a pullback into it, and the market pulled back into the supply area and also tested this previous fair value gap that we drew. Now when I get this all set up. Now what I do is that I look for I set a limit order, but for that I go over to the 15-minute time frame to set my limit order. Now why am I setting my limit order in this sort of market? I use limit orders once the market has mitigated my fair value gap and my supply area. And the reason for this is that once the market breaks below these two zones, there's a higher probability that the market is going to sell really downwards. But if the market hasn't broken within these zones, then you need not to set any sort of limit order. So now remember what I told you. The first one is that you look for the market direction to make sure that the market is a downtrend. Secondly, make sure that you draw the trend line, and your trend line should get at least 3 touches before you should confirm it as a trend line. And now after the market has given you all these 3 touches, now make sure you identify supply and demand levels. So now what I'm going to do here is that I'm just going to set my limit order at this point. Now my limit order will be below the supply and demand level on the 15 minutes. So I'll take my entries on the 15 minutes. Even though I do my analytics on a way more higher time frame, my entries often come on the 15 minutes time frame. So I'm just going to keep this like this, and then I'll have way down here. So yeah. So when I'm setting my stop loss, I'm always considering this high here. The last high that the market created that within that zone is very important to watch out for safety reasons. So now I have a solid 1:2. So me, I necessarily don't care about how many pips I'm using for my stop loss. If the stop loss position looks too big for me, one thing I do is that I reduce my lot size, because once I see a setup play out, I see a profit opportunity, I'm going to take it. But one thing I'll do to make sure that I don't lose extra in case the market doesn't go in my way is simply reducing the lot size I use by reducing how much I'm risking for it. So if I wanted to use maybe 0.5 lot size for 6, 7 or 10 pips stop loss before, but in this scenario the market has gone, probably my new stop loss position is now 10, 15, 20 pips. Now instead of using that usual 6 pips I wanted to use as stop, that 0.5 lot size, I'm going to use 0.2 or 0.3 lot size. I'll just reduce it for safety reasons. So when I'm trading, I'm not greedy. I just make sure that when I see a profit opportunity that worth it, I take it. So now I have my distance like mark at like this, and then I'll mark at this area. So now why am I marking at this particular area here? The reason why I'm marking at this particular area here is simply because once the market gets to this point, I'm taking partial profit. So if you've been trading my signals, you know that once the market gets to a certain level, like 30, 40, 50 pips in profit, I'll advise everyone to take partial profit and then move your entry position to your stop loss to avoid losing in case the market reverses against you. So now, after having my limit order like this, with my target to take a partial profit at this point, this is really simple. The next thing I do is that I let the trade play out. Let me just come over to the 15-minute time frame. Now what I look for is I just let the market to play out whatever it wants. So now let me just let it play out. Okay, our entry got tagged. We are moving into our stop loss zone. Now I'm still going to wait. Okay, now the market is giving us a bounce off. Now here is it. At this point here, I've taken 50% of my total investment. So if I use 0.2 lots, 0.5 lot size before, I'm taking a solid 0.25 lot off it, or 0.2 off it, and then letting the rest ride. But even at this position, we've gotten a decent risk to reward. And then the next thing is that I'll just hold this trade to run through, and then whatever happen, let it happen. But once I'm holding it like this, and I see that the market is still moving into my profit zone, one thing I'll do is that I'll just remove my take profit position and probably adjust it to the nearest level. Now this strategy is simple and straightforward. Number one, identify the market direction on the daily and 4-hour time frame. Number two, once you identify it, number two, draw your trend line on the 1-hour time frame. That's if you're trading, if you're an intraday trader like me who like using the hourly time frame, then draw your trend line on the hourly time frame. And when drawing your trend line, focus more on the 2 latest levels that the market has created. Avoid any of the old ones that the market has made in the past. Focus on the latest one that the market has given you, and then make sure that you are not cutting through any candlestick body, but you can cut through the wicks, which is accepted. Now after this, identify your areas of supply and demand. Your areas of supply and demand depend on the market direction, and also identify any other entry trigger you use. So if you're an SMC trader, then you'll be looking for fair value gap. If you're an ICT trader, you could be looking for fair value gap, order blocks, and the rest. So the reason why you're identifying all these fair value gaps and other blocks or supply and demand levels in the trending market is simple. In case the market break out of the trend, the market might test those supply and demand levels and then sell off again. And this is one thing a lot of traders don't notice, and then they often lose out in a trending market. Like for example, the way the market broke out of this trend and then retest the trend line, came back, retest it. There are some traders that will say, okay, the market has broken out of the trend, so that is a breakout, and then retest the trend, so we can buy from here. And if you had bought from here before, your stop loss will just be smiling at you. And why is it risky to buy when the market just break and retest the trend? It's simply because the market probably has printed supply and demand levels over there. The only time I will consider buying a market of this condition is when the market trades above this last high that it has created. Like what I mean that the market trade above it is simply when the market, after this bounce of the market came here and then retest that high before I'll consider buying it. Provided that the market hasn't done any of that, there is no way I'm going to buy this sort of market. That's why after drawing your trend line, look for your supply and demand levels and fair value gap levels and look for entry positions around them. If you don't see any entry positions around them, just patiently wait and the market will eventually pull into those areas. If it doesn't pull into it and then you think you are tired of waiting, then let it go and then go do other setup. That's why when it comes to trading, I have a lot of pairs. Like let me go over to my pair market. I have a lot of pairs that I personally trade. Here are them. I have a lot of pairs here that I personally trade. So on Monday, I'll just do setup across all of them and then I let it go. Any of them that get triggered, I take it. Anyone that doesn't get triggered, I let it go.